Hey YouTubers, it's Son of Abba here. Today I'm going to go over a nuclear meltdown portfolio strategy that should protect and hedge you against any unforeseeable event in the future in the next, I'm going to say next 10 years. And this portfolio is basically comprised of three key sectors. I have energy, which is part of commodities, precious metals, and what I like to call moat building stocks. Those are going to be my defensive yielding type of plays that are necessities such as Walmart, Coca-Cola, those things. So the basic premise of this portfolio is about capital preservation. This is not about growth. Let's not kid ourselves. Nothing's growing these days. America's growth is abysmal. You saw the last jobs number report come out. It was 69,000, and right now I think we're expected 1.9% GDP growth or something, and the population grows at 3% in America, so it's not even covering for the population. We don't have to go into all the details about why we're doomed. There's 100 trillion worth of liabilities that are unpaid and will need to be reckoned one day, so that's one part of it. But anyways, let's get into the premise of the portfolio. And if you're an investor with greater than 1 million of net investable wealth and assets, uh, the key philosophy to take is a third, a third, a third, which is this is how all the rich families throughout millennia, throughout the generations, have preserved their wealth. They've put it a third into art, a third into land, and a third into gold. And I know this video is probably not targeting these sorts of investors because you're probably not watching YouTube right now. But anyways, if you have under 1 million in net investable assets and wealth, this is the portfolio that I've designed over the last few days to protect you from any unforeseen market events. And I'm going to start with energy, which will comprise 25% of the portfolio. Then I have precious metals, comprises another 25%. And then the moat stocks. This is the moat around the castle. The castle are the precious metals and the energy stocks. And the moat stocks will be about 50% of the portfolio. So back to energy. There's three key segments in the energy sector that I like: uranium, oil, natural gas. These are all long-term plays. They've been battered recently. And I'm not saying to go in and rush and pick up all the oil and natural gas stocks. I'm going to focus in on a few. I'm going to focus in on a major company, Royal Dutch Shell. That's my first stock that I suggest. They pay 5.5% dividend yield. They have 500 billion in revenue. They're also in about 33 different countries. They're just tremendously diversified, and about, I think, 30% of their revenues is from natural gas, if I'm correct, and then the rest, of course, is from oil and petroleum. The second stock I'm going to suggest is Calumet, ticker symbol CLMT. Oh, and back to Royal Dutch Shell. The ticker symbol I'm suggesting, there's two of them. It's RDS.A. There's an RDS.B, and that's actually Shell's tanker division. So I'm not sure if that's a big difference, but I'm talking about RDS.A. So back to my second pick, Calumet, CLMT. Calumet is a master limited partnership, and by law, they're tax-free, and to get this status, they have to pay out 90% of their earnings. So they're also in the energy sector as well. They produce and sell specialty hydrocarbon products in North America. They literally use oil and natural gas as a derivative for hundreds of other products that would be a waste of time to go through them, but it's literally thousands of products. So and they pay a 10% dividend yield, if I didn't mention that. So I like them as a play. They're around 22 a share right now. Royal Dutch Shell is in the 60s. Let's see. And for uranium, I like Uranium Participation Group, and also like Cameco, CCJ. Uranium Participation Group is currently trading below its net asset value, so I think it's undervalued right now. Of course, my view on uranium is long-term growth of uranium is being derived from three main countries. That's going to be South Korea, India, and China. And the two majors among those are India and China, of course. So Now on to precious metals, the next 25% of the portfolio. I like the silver and gold miners. I would like you to, for your fourth stock, I would like you to buy one major gold such as American Barracks, Goldcorp, Newmont, Kinross, or Randgold. Any of these companies pay anywhere between 2 to 3% dividend. So I have no preference among those. They're all good. They're all quality, big major gold producing miners. And I also suggest buying one minor gold producer / explorer, such as Carpathian. These are stocks that are going to be well under $5 a share, but they offer you tremendous upside in a booming gold market. If you look back into the 80s and you look back into the mid 1990s and even back into the 1930s, you'll see periods where the microcap gold and silver mining companies outperformed the gold miners, the major miners, outperformed any asset category by over 1,500%. So that's one reason why I like the microcap. The next thing I would look at is buying one mid-major silver miner, which is Silvercorp SBM. That's the play that I like, and they yield about 1.5%. One major silver mine or silver, actually, they're not a miner, SLW. They have contracts, swap contracts with other miners that actually forward silver to them under a low price, and then they sell it on the market. So SLW, that's another one. They yield about 1.3% dividend yield. And also, if you can, I would look into buying some physical gold and silver. I highly suggest you look at silversaver.com. It's a website where you can link your bank account and you can actually buy the physical, and you can have it delivered too, or you can keep it at their depository, which is the Delaware Depository in Wilmington, Delaware. That's where I keep mine at. All right, so on to the 50% of the rest of the portfolio is the moat builders, and this is to protect our castle. Of course, we have things like Europe out there that are beyond the moat. We don't like them. They're trying to get in our castle and they're trying to take our gold. Okay? They're trying to take our oil, our gold, our energy. They're trying to take our livelihood. So these are the stocks that are going to keep them out. These are our moat. This is our moat here. I like Walmart. That's going to be my 8th stock. They pay a 2.3% dividend. I like Johnson & Johnson, 3.9% dividend yield. Procter & Gamble, 3.6%. Coca-Cola, 2.7%. And McDonald's, 3.2%. These are all high-quality stocks. And I really like the McDonald's play, by the way, because they have tremendous growth opportunity in China right now. They're having wild success, and the Chinese people love it. So that's one play I really like among these that I think you could see well above the 120s over the next couple years. And with all that said, I suggest you look into these, and you don't have to take my words verbatim, but these are stocks I highly suggest, and I know they'll protect you over the next 10 years. This is a portfolio designed to be fail-safe against any huge market downturn, because when people fear that there's going to be a market collapse, they don't want to put their money in a bank yielding 0%. They want to find companies and stocks, equities, and assets that are going to be yielding above and beyond the rate of inflation. And that's going to be companies that are producing a high cash flow like Walmart, and as well as gold and silver. These types of metal plays and asset categories are going to yield well above inflation when it kicks in. And believe me, it will kick in. It's a matter of time. It's not a matter of when. So with that said, I'm going to keep the video at that. And if you have any questions, you can go ahead and ask me here. You can Twitter me at ichibanf40, or you can just ask me here on YouTube. So I'll try and get back to your answers or your questions. Anyways, well, I hope that was informative for you guys. Thanks a lot. Bye.